everybody on our team has built and sold a company. I think that's really important for our differentiator, because when we talk to business owners, it's, hey, we get it. Whatever business it is, we've all gone through the same challenges of owning it. Yeah, we play in the B2B SaaS space a lot, and we're seeing a lot of companies they're saying that we have AI, we're using AI. Well, are you doing more than what you and I can do with ChatGPT? And you're just saying AI? Like, is it just a buzzword, or do you really have something? But we've had deals fall apart at the 11th hour because of emotion. I just don't feel comfortable selling to these guys, or you know what? I decided I want to keep going. That happens more often than not, to be honest with you.
Hello, and welcome to the How to Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. Sponsored by DuDilio. Looking to buy or sell a business? Assembling the right team is essential for success, and that's where DuDilio comes in. DuDilio is the go-to platform for hiring top M&A service providers, including attorneys, deal advisors, and due diligence experts. With a network of over 250 highly vetted professionals and boutique firms, they connect you with the expert you need for a seamless M&A journey. Whether you're acquiring your first business, growing your portfolio, or preparing for a sale, DuDilio makes building your deal team easy and efficient. And best of all, their matching service is completely free. Visit DuDilio.com and assemble your winning team today. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Today I'm here with Brian Scanlon, and we're going to talk about his company, which is DealGen, right? DealGen Partners. You are a company that generates deals and leads or deals for private equity, family office, and all that.
Correct. Yeah, deal origination for primarily private equity funds and their portfolio companies.
Cool. I'm intrigued by this space. We were talking before the show. We've talked about this before. I'm really interested in getting into kind of how that works and how do you actually get paid and those type of things. But
Yeah.
first of all, let's kind of learn about who you are and then what you're building there at DealGen.
Yeah. So I guess I got my start in the business world kind of by accident in college. My aunt had a boutique PR firm in New York, and this was 2008, I think. And she was 55 at the time. She called me and said, "Hey, one of my clients wants to post on Facebook, and you're the only person I know that has a Facebook. If I give you $500 a month, will you do it?" And I was like, man, that's $500 beers at the campus pub. So I was in. And then that turned into another client, another client, another client, and ultimately was lucky enough to build that into a business and exit that. And kind of right after college, and the guys who helped me with that were a boutique M&A advisory out of New Jersey, who I had known from a past life. And once I sold it, I joined up with them on the origination side, because our business was kind of B2B lead origination on the marketing side of things. And my job was to go find companies for us to engage and bring to market and sell, and did that for a couple of years, and realized how hard that is to win a quality deal with a small team with not a huge track record and compete with the Hoolahans and the Cowans and the Raymond James of the world with three guys in an office in New Jersey. So I said, hey, if we're finding all these deals, what if we just take them directly to the private equity funds? And yeah, it might not be the same economics, but we could get more done with more people. And then I stepped away from that and started with my partner, who had recently exited one of his companies, DealGen Partners. And really all we've focused on since 2019 is originating acquisition opportunities, kind of true middle market private equity style deals, both platform investments and tuck-ins for their portfolio companies. And we focus in a couple key areas, and we just pound the pavement and go anywhere and everywhere to do what we call full market coverage, whether that's getting deals from bankers and advisors, or it's talking to companies directly and dealing right with the founder and bringing them to our funds. We find it, we evaluate it, we match it up to the fund that it fits best for, and then we, make the marriage and matriculate the process from there. So it's been fun.
Is this something you have to like prearrange with all these guys, or do you just generate a lead and or start cultivating the lead, build the company up, make sure their books and stuff are correct, and when you get something like, okay, this is something we can take to market, then do you go out and find these guys, or
Yeah, so that what you're describing is kind of more of a sell side banker's job, right? On our side, we're looking for what we kind of deem transaction ready opportunities, right? So I want to talk to people who are actively thinking about or really, fielding consideration to sell their business right now. Now, we've had deals come back around 2 or 3 years after we first met. One right now, actually, that we're bringing back out after talking to them in 2020. But we started with getting retained search relationships with private equity funds. So they would hire us, they would retain us, and we would go focus for exactly what they were looking for. Find those companies, bring them to them, and get the deals done. And we've evolved into we do everything on success only. So now we get to match the deal with the fund we work with that it fits best versus the one that's paying us to bring them the deal. Right? We saw a lot of mismatch there. Funds that underbid, funds that didn't move quick enough. So now we prearrange all those relationships. We have about 78 funds that we can bring a deal to right now today, January 2nd, 25. And when we find it, we match it up with them. And when we show deals, we show them one by one, right? We don't send it to all 78 funds. We say, hey, we think it's going to fit them. All we ask from them is let us know quickly. If you pass, I might move it down the line to the next group. Might be a one and done. It might go to 4 groups before we find someone that wants to look at it. But we don't try to create competition amongst our clients, which are the funds.
that's the investor banker's job, right? He's the one that tries to create a bidding process. But
Right.
for what you guys are doing, I see it's different there. Now, I would imagine you built out some form of like CRM or management tool where you can track all, all 70, you said 78 or something like that. Having 78 of these private equity firms that you deal with, you must have some form of tracking system, CRM or something you guys built out that says what each one of them's buying criteria is, how fast they are to make decisions, so you can keep track of all that. Do you guys have something built out that, could track all that stuff?
Yeah, we do. Process is so important to not only the M&A world in general, but to what we do to make sure when we find something, we're not missing anything, right? So we might see a deal and say, this doesn't fit anybody. And then when we go to our database, we say, actually, private equity fund X owns a portfolio company in the we saw a sand and gravel company. We said, it doesn't fit. Well, actually, it does. One of our funds has a Portco there. So our systems allow us to match once we find the deal. But in order to find the deal, we also deploy a ton of technology there. We have a team internally, 2 guys that really all they do is worry about that outreach, how we evaluate, how we summarize, how we distribute, how we track, and making sure we're not dropping the ball at all. We take a lot of pride and we don't let anything slip through the cracks because time is money in this space, and if you delay something because you made an error and dropped the ball, it costs you a deal.
I try to build a pretty cool community around this show and around small, medium business acquisitions. A group of us meet, a couple times a month, and then for the last 100 days, right before, right up to Christmas Eve, we did a 100-day challenge where we challenge each other to better our lead generation. About 50 stages on the text person. They got accountability partners and only did the back, but about 15 or so, closer to 20, regularly participated in online meetings. So I got to interact with a big group of them that went through. One of the things I noticed was there's 4 or 5 lead generation systems that really work well, and I want to compare that. You've been doing this for a long time. What do you think your best lead gen sources are for finding off market deals?
For off market deals, it's intermediaries, right? And when I say intermediaries, I don't mean bankers. I mean lawyers, CPAs, RIAs, the guys that are looking at the purchase and sale agreement for someone. We get the best deals we get. And best for us doesn't mean, oh, it's $1 billion deal. I mean, the ones that we can get done, those come through somebody who knows the owner, who says, hey, you guys have a really unique offer where, we're not taking anything from the seller. We're paid by the buyer. So we get those deals from them, and they're comfortable because if an RIA shows us one of their clients' companies and that client makes $50 million on a sale, well, that RIA gets more money to manage. That lawyer gets the agreement and the engagement on the deal. The CPA gets more work. So everybody wins in that, and we pay pretty handsome referral fees. So in 2024, we sent out over $330,000 in referral fees, from 20 grand for a deal all the way up to $180,000. And those deals were nothing more than someone saying, hey, I think you should talk to this person. And that was it. It's not like they're underwriting or anything. If somebody sends us a deal and makes an intro, we're gonna say thank you in a really nice way, because there's good economics in this space. There's a reason that bankers are driving nice cars. There's a lot of money to be made here. And if you work with the right people, it's fun to pass it around.
It's interesting. Now, you say that the business owner doesn't have to pay you, it comes out of the sell side advisor. Do different private equity firms want to do it a different ways, or do you guys have a standard kind of fee that require them to pay?
Yeah. So just to be clear, the seller, and if they have an advisor or a banker, we don't ask anything from the sell side, right? The funds that we work with have entered an agreement with us that says, if we bring you something, you pay us. So if I knocked on a business owner's door, I'm not asking them for anything other than a chance to introduce them to, the person that might buy their house one day. But you don't owe me anything as your realtor. The funds that compensate us, we have a standard kind of percentage that we get on a deal. Some funds will want to, manipulate that one way or another. A Lehman scale is a popular way to charge in this industry: 5%, 4%, 3%, 2%, 1%, et cetera, based on how many millions of dollars. But the size of the deals we're doing, the economics are pretty good, and we also have to understand where we sit. Right, we're not the bankers in the sense of underwriting the deal on the buy side or the sell side, getting it to close, integrating after the fact. So we're not getting the same percentage that those constituents might get, but we're still getting good enough economics that we're growing the team and keeping the lights on, and sticking around for a few years here.
I was wondering if you guys are using that. I've seen that the Learmans or whatever they
Lehman,
have
yeah,
one. There's a double. There's like some people
yeah,
use a double.
yeah.
So it's an interesting structure. Is that what's industry standard for a lot of these guys, or?
I'd say Lehman is the most common industry standard, whether you're a banker charging the seller to represent them, or getting some type of referral fee on the buy side. The Lehman scale seems to be the one everybody is familiar with. We have flat percentages. We have some groups that are willing to pay us a lot higher percentage, as kind of an incentive. Make sure you're bringing us the right stuff. So yeah, Lehman's the most common, but typically we're anywhere from 1.5 to 4% of the deal value is what we're getting on that referral fee.
So walk me through your sales cycle. Like, what's the cycle of the sale? How long does it take from the day you reach out to a business owner to the day you receive a check? And
Yeah,
then what eats up that time?
yeah. So I mentioned earlier, right? Our term transaction ready, right? So if we get a deal from a sell side banker, here's the teaser. We got the data room ready. We're in market, ready to go. Typically, that's a pretty quick process. So from evaluating it to our funds putting in an offer, probably a few weeks right there. Then once an LOI is signed, once they sign that letter of intent, say, hey, I like you as a buyer, I like you as a seller. Let's go buy the house, right? Then the diligence starts. That's typically 90 days. Last year, diligence dragged for whatever reasons, economic conditions, harder to underwrite, et cetera, diligence dragged. And, we have two deals that have spilled into 2025 that are still under LOI, that one of them's in month 12, the other one's in month 14 of LOI to close. Abnormalities, right? Some issues with transaction regulatory and compliance. But anybody that tells you it's going to be a quick process, hey, we'll close this thing in 30 days, no chance. You can keep our fee if you can do it in 30 days. There's no chance. I'll bet the house on that. It takes a while. So where they tend to get held up is usually in the beginning on that initial LOI negotiation, things could drag. And then once you get into almost every buyer is going to do a quality of earnings on a business, especially in the middle market, right? The size of the deals we're talking about. So if you're buying a $300,000, local printing company, maybe you don't. But if you're buying $100 million staffing agency, you're going to be damn sure that those contracts check out. That's where the next hang up gets. But I will tell you, where we see the most slowdown is from the sellers, not the buyers, right? So typically when deals come to a halt, it's because the sell side is not providing, data with urgency. They're taking weeks to fulfill, data requests. It's invasive, man. It's a proctology exam. It really is. But if you're, prepared beforehand and you know what you're getting into, that's also something we try to help sellers with. Like, hey, we're not charging you, but we could still help you gather these things. Here's probably what they're going to be looking for. Get your contracts in order, get your P&Ls in place, go talk to your accountant. So the sellers tend to really, be the slowdown more than the buy side. And if the buy side's slowing it down, there's something going on, right? They're not financing it. They're having a tough time underwriting it. They're seeing something they're not comfortable with. They have no incentive to drag things out. Zero. They want to get it done quick.
I know in the lower markets, like the SMB, we call it SBA loan markets, 5 million and below, and probably
Mhm.
all the way up into closer to 10 million. I think there's a big gap. I think there's a gap between 5 million where SMB will fund it, and that 10 to 15, maybe even 20 million, where it kind of becomes decent middle, and there's investment banks and stuff that'll step in. I think there's an opportunity for some savvy financiers out there to finance those I'd say $5 to $20 million deals. I know in the lower deals, it's a very emotional process for these business owners. Their cap table is one or two people, right? It's a husband and wife usually. Uh, the cool thing I think you get to deal with when you start moving in the mid market, at least from what I have experienced, is now you got three, four, five people on that cap table usually. There's usually more people involved, and then it becomes more of a monetary thing, a lot less of an emotional decision, right? So, do you still work with those sellers and make sure that they're emotionally ready to close? Because that's one of the number one trip ups on the small deals.
We there I've yet to see emotion not come up in a deal one way or another, right? And it's usually there's those certain points throughout a deal where, hey, you're gonna start to get frustrated now. Like I told you, we're getting construction done on our house, right? So 30 days ago, the guy said, "Yeah, now's about when people start to get frustrated." Like, okay, thank you. So I got 3 more months of being frustrated, but in the higher end of things, oftentimes we're seeing companies that the owner's intent was to build something to exit, right? So they're not just doing it because, hey, my dad had the business and now my family's running it and it's great and I don't know if I want to sell. We're kind of talking to people who know that this is what they want to do, but there's always that emotion to it. And a lot of the unfortunate part of this process is kind of telling people their baby's ugly a little bit, like nobody is worth what you think you're worth. You're just not. And I coached college baseball for 5 years, and we did a lot of recruiting. And we talked to mom and dad, and hey, but he's a great kid. It's like, well, that's kind of a prerequisite, like it's not an accolade. It's not, like you got to. Oh, but we're profitable. Yeah, you are, but you got to be. So the emotion is always there, but I think you're right. There's more of maybe it's more education, alleviates a little of that emotional aspect of it, being, making more money, building something to sell, versus maybe somebody knocked on a local company's door and said, I want to buy you. And that owner never even imagined they could sell it for a couple $1 million. And yeah, that's going to be more emotional. But we've had deals fall apart at the 11th hour because of emotion. I just don't feel comfortable selling to these guys, or you know what, I decided I want to keep going. That happens more often than not, to be honest with you. You know?
A lot of that has to do with I call it the new used car syndrome, right? You decide you want to trade your car in. You thought, well, I want to get the best for my trade-in value, and you go out and you get it detailed, and you clean it all up, and maybe you repair a few of the little broken things on it, and you start driving it to trade it in. It's like, well, this is pretty nice now. Why would I trade this in? I don't have a car payment on this one, right?
Right.
If you really have this business ready to sell, it's run better than it's ever been run before. It's most likely not run by you, right? You
Right.
have somebody in place, that, especially if you're wanting truly to exit and not wanting a pair of golden handcuffs.
Yeah.
You've got other operators in place. You might be pulling 4 or 5 hours a week here and there, but it's just up and running, and now it's a cash machine.
Yeah.
That makes it hard to sell sometimes.
Absolutely. And we tell sellers too, like the grass isn't always greener, so a lot of people, like, you're never going to be 100% happy on either side of the transaction. That's a good deal. When we're both 90% of the way there, that's something we can get done. But, well, I could get another million if I keep looking. Maybe not. If you have a bird in hand, you really need to exhaust that opportunity, because there's very few companies that people are lined up waiting to bid on. And we know about all those. They're the household names. They're not the local business. They're not the guy that's going to sell for $20 million. It's the ones that you see in the newspaper.
It's one of those cases where if you look back, there's been a few scenarios, and usually there's at least one out there where there's a hot industry and it's being paid overpaid and overpriced like you wouldn't believe. For a long time, it was the fulfillment by Amazon,
Hmm.
right? Those companies, I would say 3 4 years ago, those were selling for crazy multiples, and people were buying them. PE firms were buying these things up for crazy prices, and I've met a few people who, one of them sold out. Luckily for him, because he had quite a bit. He was doing 60 million in revenue, which sounds real impressive, and you realize he's running on a 2% margin on most of those products, right?
We just talked to one of the biggest aggregators of those FBA businesses, who had multiple billion valuation when everything was going well. We talked to them about, hey, we need to sell these businesses for whatever the heck we can get. So now, we stepped into 5 or 8 opportunities, but not for a good reason, and those aren't the fun ones to do, but you can get them done too.
They were so overpriced when they come down now. They're selling for, I might be wrong here, but if I remember right, there were sometimes people getting offered 30x,
Hmm.
right? And
Hmm.
now it's down and realistic with just any other business. So
Yeah.
software as a service was really a lot higher 2 years ago, 3 years ago. So
Yeah.
the risk you run in all these industries is, you might be hearing out there that people are offering 10x. You might think you're worth 10x, but if you're in any of these tech industries, what are you going to do when AI takes over?
Yeah.
We were talking about this before
We were
the show
talking about
too,
it. Yeah.
right? You know, it won't be long, and we talked about this before the show, but it won't be long before you'll have your AI tool, and instead of going out and buying Salesforce and integrated in and stuff like that, you can just go in there and tell your AI, say, hey, I need a Salesforce-like CRM tool that does X, Y, and Z, but let's start off simplistic and only have X, Y, and Z features, and it'll go write it. There
Yeah.
are tools out there now that it can get damn close. If you're a little bit savvy with code, you can get it done right now and program in days what would have taken years.
Yeah. We play in the B2B SaaS space a lot, and we're seeing a lot of companies they're saying that we have AI, we're using AI. Well, are you doing more than what you and I can do with ChatGPT? And you're just saying AI? Like, is it just a buzzword, or do you really have something? And the ones who really have something, I think still the acquirers are having a tough time wrapping their head around the evaluation of that tech right now. And well, how differentiated is it really going to be in 6 months, 8 months, 12 months, 3 years? And if we're putting a 5, 10, 12 multiple on this thing, if we're obsolete in 8 months, why would we ever go there? So it's still evolving, but man, is it evolving quick? And then we haven't seen many companies for sale that truly have a differentiated AI component to it. A lot of them are just, plugging into GPT and saying AI.
Yeah, I've seen a lot of this too. Some of them are
Yeah.
selling. Some of them are selling though. There's a few kids out there. I call them kids because I'm 52. I'm about to turn 53, and a lot of these 20 somethings are out there. They're creating an API call, wrapping the software around it. An API call to ChatGPT, doing something okay and unique, and then turn around and selling that as a company
Yeah.
for a million, million and a half, $2 million within 18 months. And I get it; they're generating revenue and other stuff, but it just kind of worries me.
Well, you mentioned before, how do we keep track of all this stuff? And prior to adopting AI into, we call it like the deal match, right? Tool that we have. It was an Excel spreadsheet where you were searching for names and, V lookups and all that. Now we plug in certain criteria and say, which funds does it match? And it says it matches XYZ Capital because they own this company and this could be a perfect bolt on. And, we had to train it for that, but it does it in 4 seconds, maybe, and that's somebody we were paying money to do for us 6 months ago, you know?
I have a bot that I created on ChatGPT that is every episode of this show. I took the transcripts, pumped it into a text file, put it on there, and then a lot of the freebies people gave me, PDF books and ebooks and all
Yeah.
that, I pumped those in there, whatever it could hold. And then so I have an acquisition bot that people in my community can access and use, and it's pretty easy to go in there and ask questions about small deals. It's
Yeah.
all geared towards these small mom and pop $5 million and below deals, not mid market stuff.
You know where it's great, and it could be very applicable to the audience, is when you see a deal and you put that information into ChatGPT, what question should I be asking this seller? Right? That's a great prompt for us to go, okay, well, I didn't realize this regulatory issue might come up. Let me ask them about it now. It gives you a lot of the same. Is there customer concentration? All those back of the baseball card type of questions. But every once in a while, it comes back with something that you'd say, huh, I didn't know that, because we don't know everything about, commercial cleaning or B2B SAT, whatever it might be. So it's really useful, man. It really is. But it's also, I think people can get frustrated with it quickly, where you put something in and it spits back some stupid answer and you're like, this thing doesn't work. It works, but you got to do a little work to make it work.
Yeah, you got to know how to prompt it and
Yeah.
how to ask it the right questions. One of the things I have my guys do, and this might be useful for your new anybody new there, if you bring on somebody new, anybody nervous about a conversation, is I have my guys upload. Um, I tell them because of NDA, you really should strip out business names and stuff like
Mhm.
that. But I have them upload everything about a deal, like everything that gives you about a deal. If somebody like a broker sends you all the information, upload it there. Tell the AI like you are this company. You're the owner. The owner's name is George. You're George. I'm a buyer. All right. I want to role play. I'm going to have some conversations with him where I need to build rapport and get more information about the history of the company. And you give it his objectives, and then use the voice side of it. And after you pre-trained it, and it's really good about playing role play with you.
Yeah.
It'll actually mimic. It'll tell you. Well, tell me the story about how you created it, and it'll just go out and make up the story about and it won't be the honest one, right? But it gets. I have a lot of new people that are in this space, and they're one thing they're comfortable. I mean, uncomfortable with is how do I talk to this owner who's run this thing for 30 years? I just got my MBA and I have the money for down payment. I can do the loan, but
Yeah.
I, how do I really build rapport and trust with this individual? I said role play it, either with me or if I don't have time, pull up your chat GPT and build a scenario, do role playing with it. It's really good at the role playing scenarios.
No, and we have, I mean, we go through the same process of having to build that rapport, right? I mean, we have a pretty good offer. Hey, I might have somebody to buy your business and I'm not going to charge you anything to do it. Usually people go, I'll listen to that, like, sure, you're going to sell my house and I don't even have to stage it. Yes. But you got to get them comfortable with, the ropes here, and everybody on our team has built and sold a company. I think that's really important for our differentiator, because when we talk to business owners, it's, hey, we get it. Whatever business it is, we've all gone through the same challenges of owning it. So that builds some immediate trust. But then our knowledge of why it might fit a certain fund, and talking about that fund and the people behind the fund and why they're different. Because a lot of private equity fund, if you go to every private equity website, it's we're not just like every other private equity fund. 90% of them say that in one way, shape, or form. 2% of them really aren't like any other one. Everybody else is kind of the same. But it's not a bad thing. It's just you have a lot of money and you're successful at buying and growing and exiting, and that's great. The nuance lies in the differentiation, right? Like, why is this a good fit? Well, they own this company. If this company buys you, it's going to increase the revenue by this much. There's an equation to it, but it's all about building that rapport and us having, seasoned people that aren't going to pee their pants when they get on the phone with somebody who says, "Yeah, I did 200 million this year. What do you got for me?" The 22-year-old analyst might not know what to do there. We got guys that go, "Okay, I have 12 funds that might look at you now because of that."
I have one client right now. They're buying cabinetries. They buy cabinet
Yeah.
companies. We sent out a bunch of letters, and one of the guys calls me and says, "How big you willing to go?" I was like, "I don't know. What you got?" I made friends with this guy, and unfortunately, it was a 60. That was when it was 67, $68 million in revenue. He was bigger. He had 60 something locations at one point, and COVID hit, some other stuff, and they're down to 4. But they build cabinets and install them all over Florida and a few other states. And they're doing, I want to say 67, almost $70 million a year. They have an investment banker, but I built such rapport with him. He insisted the investment banker call me, right? And his CEO, he'd already retired. His CEO called me, and he's, "I don't know what you said to that business owner, but he's insisted we bring you in on this. Like we already." Everybody's got until Friday to turn in their offers. Like, we're expecting 5 LOI offers by Friday out of 50, contestants or whatever, 50 people, because this investment banker really went out and, created this auction process. They finally just said, like, you guys are just you couldn't get an LOI to us fast enough. We couldn't get you the data room and everything. So I just built rapport with the guy and said, "Look, if it fails, if you don't close, call me back." Our little cabinet company has no set mechanism to buy a $65 million company.
Right.
I guarantee we find one. It was just one of those. If you move forward, I know, just because of the show and just because of everybody I know people that can help move that around.
Yeah.
Right.
We do sell side advisory as well. Like, I'm, licensed investment banker, and every deal we've won on the sell side where someone says, "Actually, I want you to help me sell the business beyond your buyer network," is someone we've reached out to on the buy side, built that rapport. For whatever reason, the deal might not, 78 might sound like a lot. There's 78,000 private equity funds and acquirers out there. So once once it matriculates through our roster and it's a fit, but it's still a good business, we're pretty proud in the sense of all those deals we win just come from building trust with people and doing the right thing. Hey, I'm going to put you in front of these funds. I don't know if they're going to buy you, but I guarantee you I'm going to get this feedback for you. And they appreciate that. In the deal making space, I think there's a lot of saying one thing and not delivering on it. And there's some negative connotation to bankers and advisors in this. If you just do what you say in this space, you get a lot more opportunity. And it doesn't mean you have to sell the person's company, but I'm going to do right by you to start. And you're not going to look up and go, "Those guys were jerks." Never. It's never going to happen.
It's worse at the lower markets, I think, just because brokers have such a bad rap,
Yeah.
right? They say only 20% of deals that ever go through brokers actually close, right? One, they're taking on businesses that are hard to sell or impossible to sell. They're not sellable. They don't have their act together to sell. And two, they basically post and wish,
Yeah.
right? They take the business, make a little, a couple documents, maybe a balance sheet if you're lucky, and an income statement. Sometimes you're missing that, and then they slap it on biz buy sell and hope somebody beats down their door,
Yeah.
right? And that's sometimes. I mean, we've tried reaching out to those things. A lot of times, you literally have to trace these people down and like, look, I called one broker's the head of it's a franchise broker. I called the head of the franchise. I was like, "I've contacted this guy 4 times for this
Yeah.
listing." And I was like, "This is ridiculous, and you're not doing the business owner any favors."
Yeah. The marketplaces are, in that lower end of the market, it's a lot of hit or miss, I think, both with company and broker. But there's some gold in those hills. We're actually, and this is probably applicable to the audience if that's kind of where they're playing, is we're building a tool that maybe will be ready by the time this gets published. But if not, shoot me an email. I'll put you on our list. We're aggregating all of those publicly available deals. So there's way more than biz buy sell and flippa, and there's a ton of publicly listed deals. We're aggregating all that into one database. We have over 6,000 deals in it now that we've been using internally to generate opportunity. My partner found $100 million roofing deal on one of those sites, and we're almost hopefully under LOI with the thing pretty soon. So there's gold in there. But for that SBA loan type of buyer, those sites are great. And we don't work with independent sponsors, the SBA buyers, the entrepreneurs through acquisition, because it doesn't make sense for us to try to fight with a client to make that single acquisition. There's a lot of like race to the ball there. But building this was, we developed it internally and said, wait a minute, there's a ton of opportunity here for search funds and ETA and SBA type of buyers. So we're going to be unrolling that, and I'm pretty optimistic about it. So if anybody's interested in that, if it's not on the site by the time they hear this, shoot me an email and I'll make sure you're one of the first to get it.
What's the toughest deal you've ever closed?
None of them are easy. So
I knew you. I was hoping you'd say that.
yeah,
You got to quit. Like, I see all these people trading, and I've interviewed a bunch of them. They're like, yeah, zero down, get a deal done in 30 days. I'll tell you right now, I've interviewed people that got it done. I know that zero down deals get done, but you're better off unicorn hunting. Like these guys, to get a zero down deal, you got really creative. The owner didn't get zero down, right? You just zero out of your pocket. You did something really creative. Most of the zero downs I know of came from doing sell leasebacks where they bought the business and the real estate, and they sell leaseback, and then they had a ton of like heavy equipment, and they could do sell leaseback on some of that equipment, and basically they raised the capital through assets, and now this thing they've just acquired is heavily laid with debt, right? And hopefully it'll survive.
Those are tough, man. That's not necessarily, I think, the space we play in. I think that's, you're able to do that with a very, like you're saying, that's more of a unicorn than the tech company unicorns are, right? There's probably more of those out there right now, valued in the billions, than there are guys willing to do a no money down deal. But it's typically that seller willing to, I don't have a son in the business. I'm 82. I need to hand it to somebody. You get really comfortable with the acquirer being the right type of person, and you get some kind of creative structure down. But in where we spend most of our time, you better be putting money down, or you ain't going to win it. You're not going to win it.
A lot of the people that teach this will say, well, even the big guys do it. It's all stock transactions. They do all stock transactions all the time. They do mergers all the time. I was like, yeah, but they don't understand that a lot of these all stock transactions, it's fairly liquid anyway. Day after it closes, right? Those people can go out and the day after it closes and sell some of that stock off if they need to be liquid. Yeah.
And it's stock that's worth something. If I go to someone and don't have stock or anything, I'm just trying to smile and win the deal. Like what do you really have for me? And you mentioned that recurring revenue piece. That I would say the theme for why deals got disqualified in 24 for us was project-based revenue versus recurring revenue. If something had recurring revenue, even if it was a service-based business, that was way more attractive than, oh, we're a roofing company that does commercial, but I have to go win 30, 40, $50 million every year, instead of, no, we're a maintenance company who all I got to do is keep building that book, and you wake up and go, wow, we're doing 60 million recurring every year. The funds, if it's easier to underwrite, it's easier to buy, it's easier to underwrite predictable revenue. That's why SaaS has such a high multiple.
Yeah, and that's one of the reasons why a lot of these industries, it's tough, because the guy buying it has to understand that you're walking into a space where the guy leaving, been in the industry for 30 years, he's making sales and stuff off of his personal reputation that you don't have anymore. And, I've seen some of the best salespeople in the world think they're going to step in and do something, and like, I can't close this, right? I was talking to a friend of mine who owned a staffing company, and he hired a guy on that was the best salesperson in the world in their industry, right? But the whole thing about, like you talked about earlier, like an analyst talking to a company that has $100 million, he starts talking to CEOs instead of the people he's used to selling from, and he don't speak their language. He doesn't know how to bond with them. He doesn't know how to connect. He's not closing anything for months. This is a big staffing firm, and he failed. This guy was making close to 7 figures in his previous sales job, walks into a high end engineering staffing firm and can't make a single close.
Yeah. We learn the hard way that part of like what you're saying is we want to work with funds that they have a really pointed thesis. The guys who we see that are more generalists, the private equity funds, they're either newer, haven't done a lot, or they're monsters, and they can be generalists because they have 12 teams that are all very specific, but the fund is generalist. Everybody else in that middle, we only do food and beverage, we only do SaaS, we only do this. Why? Because you have to have that expertise if in fact you're going to add value to that acquisition, or you just buy it and you hope it grows and you flip it for a higher multiple down the road. But going into something in the acquisition world that you don't have a background in, that you think, oh, all I got to do is tech enable this, or all I got to do is bring my network to it. No way, man. Keep your money in your pocket.
So how does it work for the due diligence and all that stuff? You just take them to LOI and then you kind of get out of their way, or what do you?
Yeah, for the most part. So we're not doing diligence, right? In the sense of post LOI diligence, but we do our best to package up the opportunity to the point where when we hand it to that fund, they should have enough to, say, okay, I want to look harder. But when they say they want to look harder, we got to have everything ready to go for them to evaluate, right? And if it's a deal coming from a banker, usually that's low lifting for us because the banker's got that stuff ready. There's a data room, you plug in an email address, we're all good. If it's a proprietary deal where we're dealing directly with a founder, that's where we start coaching the founder on, hey, we got to get your last 3-4 years P&Ls, balance sheets, cash flows exported, ready to go. We got to make sure your contracts are in line. We had a perfect example. We had a roofing company that we looked at in California, founder owned, got pretty far down the line. Our fund couldn't validate over half of the employees' citizenship, right? So we didn't think to ask that. Owner didn't divulge that, but you got 200 employees and 100 of them don't exist on paper. That deal's done, right? So we now know, all right, this is a question we got to put on the docket to ask, but that's the type of stuff that we try to get all that information out beforehand. And the more we do on the front end and the better we can package it, the quicker feedback we get, which sellers and bankers love, right? You send me a deal, I'm going to tell you in a day who it's going to fit. But the quicker we can get it through to that LOI stage. So we try to do a lot of work, but once they sign an LOI, they have firms they work with and teams that are doing diligence on product and the code if it's software, and experts on their roster. That we have one fund that's in the food and beverage space, that the people that they're associated with, that they can plug into a company if they need to replace management, you would think they were making it up. They're so impressive. We had an aerospace and defense fund that had generals and everybody on the cap table for the fund, and those are the type of guys that can add value. But yes, long story short, where once the LOI is signed, we know what lane we sit in, and we do a good job at staying in our lane. Occasionally we'll get asked from a fund, hey, our legal team's tied up, we're doing a small deal that you brought us, a lawyer that can help us with this, or do you have a group that does quality of earnings? That, yeah, we know Baker Tilly, we could bring him in. So we'll get asked every once in a while, but we don't overstep unless we're asked.
It won't be long before you'll be able to give AI an email address and say, "Hey, go check out this data room and and give
Yeah,
me 15 questions, or tell me where the weak spots are. Do a
yeah,
SWOT, right? Strength, weaknesses, opportunities, and threats. Do a SWOT analysis on this deal, and it'll just crawl through a data room and do it. You can do it now by uploading all the files, but it won't be long before you'll just be able to say, log into this and do it. Here's your credentials to log in.
absolutely. And we're trying to stay as ahead of that curve as possible with implementing it into our business, because I think so much of what we do can be done without a human. Like AI can send emails and book phone calls, but once you get that founder on the phone, you better have somebody who knows what they're talking about on the other side. That relationship piece, I don't understand how that could be replaced in the deal making world. I think these marketplaces, where you list a deal and you buy it, and there's very little interaction because the deal speaks for itself. That's where people like us will be replaced, but not on those deals where a lawyer says, "Hey, I need you to talk to my client. him and his wife are 75. They want to sell the family business. They don't want to auction. That's where it's going to be really hard for AI to take over any of that. Maybe I'm way off, but I think I got enough runway that we'll be all right.
Do you think there's a play for doing what you do in the lower markets, or do you think because here's my hesitation on why I think it may be harder to do in the SMB world, like at the bottom of the markets.
Yeah.
One, not very many PE firms are dipping down that low, but the secondly is a lot of the sellers in that SMB market. Let's just call it under $20 million deals. Most of the sellers in that space that are mom and pop owned, more important or as important of the money is a safe pair of hands. And PE is made out to be the villain in this scenario. So a lot of these guys are actually scared of PE. They'd rather sell it to another person that would be, another quote unquote mom and pop to run it the next generation. And then they would ever to sell it to some PE firm that's going to cannibalize it and maximize it for profit over everything else.
Yeah, and that's the pain point we're trying to solve with the deal generator, with the deal aggregator that we're building, is just put the deal in front of somebody and then let them run with it. We're not looking for percentages on those deals. We're just, if we can help a small business sell their company and somebody buy it and it works, great. The bigger deals are, the more private equity style. That's where selfishly the economics have to work too. Doing $1 million transaction, how much can we literally, really make, right? And you mentioned the bad reputation of some of the brokers in that side of the world. We met a group that charges 15%, right? So now let's say you're selling your, I don't know, dry cleaning business for $300,000. 15% is a partner. That's not a service provider. That's a partner. I mean, you lose your license if Raymond James tried to do that. That'd be crazy. So there is that world where people are taking advantage of that end of the market. But I think for us, aggregating those opportunities and presenting them and saying, hey, here's the opportunity, but now it's on you to go get it done, versus we're going to find it, evaluate it, match it, liaise it, hopefully get it to LOI. It kind of separates at a certain monetary point. That's where those guys, and I will say, we were surprised with some pretty sizable funds coming to us and saying, hey, we're willing to look a little lower now. We're willing to go down market a little bit. Not, $1 million transactions, but we'll dip below that 5 million EBITDA threshold to 3 if it makes sense now. And that's a big, it's a big change.
I've seen that in things like plumbing and heat and air, where it gets really hot,
Yeah.
and they've already got their anchor. They've already got their basis set up. Where I just moved from a couple of years ago, I was living in Tulsa. A lot of the small mom and pop plumbing shops, friends of ours, the Rabies, they own one forever, and it got bought up. And it was small enough. You're like, why was a PE firm touch it? Then you realize they bought up like 12 of them in that 50-mile radius. And the same happened to the heat and air space in that area. Like, unfortunately for that area, it did two things. When they bought up the heat and air, they jacked up the prices for service for almost everybody there. And the little guys that are still one or two people, they got a lot more business now because they can underbid these guys. The other guys kind of got together and lifted the price for everything.
Car washes is a space we saw that in, where you'd be like, this is a single lane, $500,000 a year car wash. Well, these guys own 400 of them, so we'll just buy this one too. At a certain point, it becomes collecting baseball cards. Like, yeah, I'll buy the whole lot, and if I get something good, great. If not, whatever. It was 500 grand, and that's a space where that SBA buyer, car washes are pretty interesting, right? Because you have the real estate component too. But for the private equity funds, it's just power in numbers at a certain point.
Like you said, none of them. I asked you what's the most difficult business that you've
Yeah.
ever sold. You said none of them were easy. What's the most interesting business you've ever sold that, like, did something weird or built something strange or?
Well, I'll tell you, the most difficult one was actually a sell side deal, right? Where we were representing the company, and the owner was, it was just he was an absolute nightmare of a back and forth flip flop and changing his mind. I like these guys. I hate them. I'm frustrated. I love you. All this stuff. And then during the transaction, the company took a hit and the deal dynamics changed. And we were able to get the deal done, but it was a slog. And man, I had hair before that deal, and now I got none. But that one was months of going to bed every night going, we're either going to make a couple $1,000,000 or this is going to evaporate in the morning when I look at my text messages, and ultimately it closed, which was a blessing, but that was tough. But interesting one. We didn't get this one done, but I thought it was the economics of the business was incredible. So three police officers started a membership site for gun owners, right? So if you have a gun in your home, you join this membership site, and then they make sure if you discharge that firearm for any reason, good, bad, or indifferent, they have legal counsel that is available to you. That's top notch, right? And essentially, they're ticket takers, right? So you join the membership. They have very little cost. The economics of the business was like an 80% EBITDA margin on tens of millions of dollars. Three police officers started, and their whole thesis was, we have terrible representation as cops. Imagine what a guy sitting in the middle of nowhere in Alabama has if he uses that gun. So they're still out there. I don't know if they transacted, but just a business that they started with an idea and ended up taking 15-20 million dollars home every year in EBITDA just because they had this, they had a unique opportunity that they solved a pretty vulnerable, problem, right, for people.
So I was looking through my wallet because I had their service for a while. So
Okay.
I'm a gun toting redneck. I don't have a concealed carry in this state, so I can't carry, um, because California's tougher to get one. And I haven't even
Yeah.
tried. Probably could because we own a concession business and carry cash a lot. My wife and my kids started a
Yeah.
concession business. Uh, because we carry that kind of cash around, I probably can get one here. But
Yeah.
I had that insurance. Basically, it was really a really great program. Yeah, it was a pretty interesting company. We
Yeah.
signed up, my wife and I both, because we both had concealed carries.
So interesting about that one, right? Like, all right, why didn't we succeed in selling it? Well, our fund said it touches firearms. Personally love the mission. Great idea. Touches firearms. We can't do it. Can't invest. So, then you have companies like that where you're like, if you told me I could buy a company that's doing 80% EBITDA, sign me up. Nope, not that one. So there's so many reasons deals don't go through. We just saw another interesting one. It's a disaster response business where they put out a lot of the wildfires by you, but they also, if something happens and FEMA gets called, they bring these guys in. So they, during Katrina, they fed 16,000 people a day at the Astrodome, or at the not the Astrodome, wherever they house them. But really cool, like a lot of moving parts, highly profitable, cyclical because there's no fires for a year or less, or no floods, and the business goes down. But really, just great people. Two guys owned it, salt of the earth, make a ton of money, like huge transaction, but one that private equity looks at and goes, well, it goes like this every year, so we can't underwrite it. Like, what? They're doing 60 million on the bottom. Underwrite the deal, but no, we can't touch it.
So that's interesting. Well, we're gonna run out of time here. We're already over the hour, so let's just do some of the wrap up stuff. Tell
Sure.
everybody tell everybody a little bit about what the software, the tool you're building, the sourcing of deals, and then give them your email address so they can get on the waiting list for that.
Yeah. So DealGenPartners.com is our site. Hopefully, by the time anybody hears this, you'll be able to click a button that says Deal Generator. That's our aggregator, right? So what that's doing is it's pulling in publicly available deals, putting them in a database, and every day you wake up with, right now we're adding over 40 deals a day to that database, brand new. So rather than trying to find everything that's out there, we're just putting it on a silver platter for everybody. It'll be a very, reasonable subscription monthly, no deal fees. We don't want any economics, just something that we've gotten deals from internally from building it that we've closed. And we said, wait a minute, there's an opportunity here. So I think for that search fund, for that entrepreneur through acquisition, for that person that might be doing an SBA style loan, it's a very useful. We're going to have a free trial with it. So if you think it stinks, don't sign up. But I think people are going to, see value to it. So that's one thing. My email is Brian at DealGenPartners.com. I'm pretty active on LinkedIn. Reach out. I guarantee you I'll get back to you. whether it's, for the deal generator or anything else. If anybody's got a business they want to sell, that's those are the guys we want to talk to, but we're also more than willing to, just be helpful and useful. And I think there's a lot of room in this space for people to help each other without having their hand out. So if anybody needs anything, I'm happy to help.
I'm connected to all kinds of sell-side advisors and all kinds of investment bankers, and you name it. I've interviewed quite a few of these guys. If somebody has a deal they want you to take to your people, they've heard something that resonated with them, you want them to reach out through LinkedIn, through your email address.
Email's best. Yeah. So if anybody, knows a seller, or if someone's an investment banker, an advisor that has a live deal that they want to put in front of us, we do not take any economics from them. That's 100% their money. So we deal, of the transactions we did in 24, 75% of them had a banker associated to it. 25% were proprietary direct to founder. So we do plenty of deals with bankers, but email's the best. LinkedIn and email, it's, same. It all goes to the same phone. So whatever you hit me on, I'll make sure I get back.
Brian, I want to thank you for being here today. We do need to wrap this up, and I guess we'll call that a show, man. Thank you for being here.
Thank you. Really appreciate it. That was fun.
This episode of How to Exit is brought to you by Final Ascent, the boutique M&A firm helping lower middle market business owners achieve their ultimate exit. At Final Ascent, they know selling your business is one of the biggest decisions you'll ever make, and they've been in your shoes. Their team isn't just made of advisors. They're experienced business owners who have successfully navigated their own exits. Final Ascent specializes in preparing businesses for sale, building value, and connecting with a national network of qualified buyers who will compete for your business. They don't take on a client unless they're confident they can sell your business at the current market maximum value. Whether you're ready to sell now or planning for the future, they'll craft a roadmap tailored to your unique goals so that you can walk away with maximum value and a peace of mind. Start your journey today at Final Ascent. That's www.finalascent.com, because your next chapter starts with a successful exit.